What if I had invested in Ukraine? It's a question that a lot of people who are diversifying internationally are asking. I'm going to tell you my thoughts. So obviously, very sad situation for a lot of people with what's happening in Ukraine, but I want to talk about today the investment angle. We haven't really talked a lot about Ukraine over the years. We've shared that we had a difficult time hiring there because it was one of the more well-known offshoring jurisdictions, particularly in Eastern Europe, which I think stands out above a lot of the other regions in the world for hiring talent. Ukraine had been a popular place. We never really got traction there. I had started to look at it in like 2016, 2017 for various properties. I was interested because of a permanent residence program, but the permanent residence program really wasn't that workable, and it kind of culminated when I met a member of Ukraine's parliament at Nomad Capitalist Live last year who said, yeah, we're trying to improve it because it doesn't really work that well to attract investment. And by the time I was looking at property in 2016, 17, I kind of thought a lot of the great deals over the last 2 years had gone away. I just never got involved. And so for all of those reasons, I never really, stood here and advocated for Ukraine. We've talked about Turkey, we've talked about Georgia, we've talked about Armenia, we've talked about other countries in the region, Serbia, Montenegro, Albania. So Ukraine never made it to our radar, but I want to talk about exactly what happens if you had invested in a country like Ukraine, because I think some people are also saying, well, hey, this doesn't sound like a very good strategy, this investing overseas, because look at Ukraine. Anyway, if it's your first time here, my name's Andrew Henderson. I'm the founder of a company called Nomad Capitalist. We're a boutique consultancy firm that helps 7- and 8-figure entrepreneurs and investors legally reduce their taxes overseas. We help them expand their portfolios, expand their businesses offshore, protect themselves with dual citizenship so they always have options. We also host the biggest and best offshore conference called Nomad Capitalist Live. And so one of the things that I think you ought to consider is when you're going overseas, the idea is diversification, right? We're not moving from the United States, from Canada, from Germany, from Australia, and just plowing everything into a new jurisdiction. Many people keep part of their investment portfolio, whether it's stocks, whether it's real estate, whether it's business interests, whether it's debt, whatever it is, in their home country, and then they start kind of gradually diversifying into other countries. They might, pick up a small rental property in another country. They might pick up a property that they're going to live in another country. They might go and make a $100,000 investment in a REIT. They might pick up some shares of a fund in their foreign brokerage account. Most people, let's say you've got a $10 million portfolio. Most people are not coming in and moving $5 million overseas, let alone into one country. Okay, and so you want to start off small, you want to get comfortable, and you want to stay diversified. And so when I look at all the different countries that have been in my portfolio, in terms of emerging and frontier economies, Uzbekistan, Cambodia, India, South Korea, not really that emerging, but an interesting country, Colombia, Brazil, Turkey, Georgia, whether it's property, whether it's stocks, whether it's other assets that I have in these countries, I generally believe in the future of these countries. In some cases, it may be, I think, a rockier ride, and I believe I'll get compensated for that, whether it's in the form of greater returns, whether it's in the form of a residence permit or something like that, right? So I'm using investments to diversify my own personal portfolio in the same way that when I looked at property in Ukraine, they had a deal, hey, you buy $100,000 worth of property. It was kind of a convoluted setup with a company, but you can get permanent residence. It never really led to citizenship in my opinion, but hey, it's another option, a place to live, and it's not the worst place to spend time up until recently. And so you could look at personal diversification options overseas. Obviously, I don't really get much in terms of residence or citizenship or anything else from Cambodia. I just get a consistent check. The properties go up in value. I feel good about my investment there. By the way, this is not financial advice for you. India, one of the better performing countries in my portfolio. Again, I'm not telling you what to buy. This is just what's worked for me. And so, because there are so many different countries, and because I've been to all these places and I see the opportunities, I'm not simply saying, hey, take $5 million of that $10 million portfolio and put it into Ukraine. What I might have done is bought a property in Ukraine either to live in or to rent out. And if that had worked, I might have kind of expanded into building a series of properties there. I don't really know that you would have put your money in Ukrainian banks. In fact, I wrote when I was in Ukraine in 2017, hey, don't use Ukrainian banks. That may have a little bit changed recently. There are a bit better options now. I wouldn't really be in the Ukrainian stock market, It's not really a big stock market. So it would have been a property play. And you would have kind of just diversified, and you would have been collecting, higher rents than you probably would have been collecting in the West. And so let's say I would have gotten in 2017, I would have had 4 or 5 years to collect rent and get a decent amount of my money back before the very sad events that have happened recently have taken place. But again, hopefully as you're deploying capital over the years, as you build up your international portfolio, you're also making more money. So where, let's say you put $100,000 in Ukraine and then 3 months later it works, you buy something else, a year later you buy something else, you've been making money along that time to where that percentage of your net worth could be 1%, 2%, 3%, to where I've said, listen, people want to make fun of me for, I mentioned Cambodia so many times, they make fun of me, oh yeah, Cambodia. Listen, Cambodia hasn't really had a recession in 3 decades. I get a pretty consistent check. I get consistent growth. I believe in the country. But you know what? If the entire thing fails, not only do I have the money I've already gotten back out of it over all the years, but my portfolio in Cambodia is like 1% of my net worth. And you could obviously measure net worth with a business, without a business. If you have a business, what's the enterprise value? I generally don't factor that in. But the percentage that I would put into any particular market may be 1, 2, 3, maybe it's 5%. I mean, maybe in some extreme cases, if I'm really personally invested in spending time in a place, it might be, higher up in those single-digit percentage range. But never am I going to, oh, holy cow, the whole place fell apart. I lost half of my wealth. So that's the first thing. Diversification means just that. You want to be in different countries. And so whether that means a great private bank overseas or a great brokerage account that allows you to invest in a whole bunch of new markets that you never had access to, new stock exchanges, new funds, new ETFs, what have you. Whether that means property in other countries, again, that could come with residence or citizenship benefits. By the way, I mean, not that Ukrainian citizenship is something that you were likely going to get unless you actually moved to Ukraine and lived in your property that you bought through the permanent residence program. But I mean, Ukrainians right now, if you had that Ukrainian passport, hey, I mean, potentially that was worth something in terms of further diversification, in terms of having options, because right now Ukrainian people are being welcomed for residence permits. They're being welcomed for bank accounts, things like that. The other thing I think about this is, eventually, Ukraine will come back in some form. I certainly hope it does, because I have a number of friends from there that I'm rooting for and we've been trying to support, and I want the best for them. But I also know that over time, I do think that things will generally work out. That's the optimistic part of me. Now, as the investor, you want to be somewhat pessimistic. You could also look and say, number one, it's going to take some time. I saw one article says it's going to be well into the 2030s before it fully comes back. I certainly think that, depending on your age, there are certain deals that you're going to make going in knowing, hey, this is going to be a rocky road. Jim Rogers was on this show and said, hey, Turkey's a mess right now. Maybe I'd be looking at it. You can go and watch. We'll put a link in the description. And so, do you think Turkey is going to be a home run tomorrow? There are some deals that I've seen people make in Turkey that are close to home runs. But I would be looking at Turkey as a longer term deal where you've got a lot of fundamentals in place and it's going to be a rocky road to get there in the next 10 to 20 years. You'll do very well. The trajectory of the country will improve. Obviously, a country like Ukraine is a tremendous and very sad setback right now. Is it eventually going to come back? I think even in times when you've seen that a country ceases to exist, does every asset in that country cease to exist? There are case studies that show that the answer is not always yes. I mean, sometimes, listen, does the money in the banks just go poof? Does your property just go poof? I mean, right, if you own property in Crimea, right, the property's still there. And so, listen, I'm not talking about the geopolitics here. I know it's obviously a very sensitive area, but I'm defending the idea of why you should go and invest money in countries that need your investment, that are willing to potentially offer you benefits like residence or citizenship, or where the market, because it's demanding of more capital, is willing to give you those higher returns. So the idea that your money simply evaporates in these countries, to me, is wrong. You want to be fully diversified across different countries, and you don't want to put your entire fortune in any one country. Obviously, the more you know a place, the more you can certainly go in on it. But for me, I have multiple homes around the world. I might have bank accounts in those countries. I might have other investments in those countries. But I'm still not going all in those places because who knows what could happen. And so what I think I look at things is I look at there are risks in Western developed countries. People think, oh, well, the United States is not going to have a war where someone's going to come in and take my property. But certainly people's properties are taken in other ways. There are other issues in the U.S. Taxes are going up, regulations on how you can use your property going up. In the U.S. and in many Western countries, you can't do Airbnb. You're not allowed to have a second home. Second homes are taxed at this higher rate. There's different contingencies on selling them. There's all kinds of different things, taxes going through the roof. So for me, I look at the Western world and say, those are the risks of holding property there. In extreme cases, you have things like civil asset forfeiture, where maybe your certain properties just gets taken. I want to be diversified. And I think that, I've never had any assets of mine that have been lost due to some kind of geopolitical situation, due to some kind of war, due to anything like that. I've generally done pretty well, and other than just the bad deal where you just didn't do the right deal in the first place, but nothing related to like what's happening in Ukraine. But if you lost 1% of your wealth, that happens in a lot of markets all the time, right? And I think that 1% of your wealth, not only if you're financially well off, is a good diversification tool. Again, it can give you residence, it can give you citizenship, it can open up in certain countries in the Gulf, for example, the opportunity to open a bank account. If you own property in Bahrain and you want to get their residence permit, you now have the obligation and the opportunity to get a bank account to put some money to where now, okay, they have pretty strong banks there. That's an extra pot of money that you can have access to. You may need to report that in your home country to the tax authorities or the Treasury to stay legal. But now you've got some money that's a little bit harder to grab. You've got money maybe in a different currency that has some diversification benefits, that has some asset protection benefits, and that property can facilitate that. So I think that you not only get the diversification, but you're taking the risk as you are anywhere else. I think that there are different risks, but the idea that the country that you live in that has no risks is not true. There's plenty of risks in the country that you're in, and one of the risks is you have high levels of inflation, which certainly many countries do right now. You have potentially currency issues. You have low returns. You have the risk that properties are largely mortgaged, and if something happens in the financial markets, the property values could come down, as we've seen, right? And so you could solve a lot of those risks involving in some of the emerging countries that I just mentioned, right? You have much better valuations on properties in some of these places to where it's just a matter of kind of sitting and waiting it out. Are there other risks? Sure, but I look at risk as existing everywhere. I'm going to be diversified. As I said, I'm going to get paid financially and with greater diversification options to do that. And 1%, 2%, if that were to go away, that's a very extreme circumstance. If you take that on an actuarial basis, what's the percentage chance that some investment in the world is going to be just totally destroyed and it's never going to come back? The country will never be rebuilt. It's just all going to fall apart. What's the chance of that happening on a particular investment if you go in with some general, common sense? 1%, 2%. So if you put 2% of your portfolio in at 2% kind of implied risk, 2% times 2% is mere basis points that you're basically guaranteeing to be lost. Would you pay that for the opportunity to have a residence permit that maybe lowered your taxes, gave you a place to go, was a place that you wanted to live? Who knows? Fill in the blank. Maybe it gives you a citizenship that you can use as a backup plan. Maybe that citizenship saves you taxes in the future. Maybe it helps you travel. You would pay for that, right? And would you pay, that kind of 2% times 2%? To know that you had different currencies, that you had different parts of the world covered in a way that just buying an ETF on the New York Stock Exchange won't cover, because it's not as diversified, it's not as broad. To me, that's incredibly worth it at a time when Western countries are rather stagnant. Economies in Asia and other parts of the emerging world are back to growing at fast rates. I want to be a part of those places that are growing quickly. If I get the residence permit for free, great, but I want greater growth in my portfolio, and I'm willing to take a risk on a small portion of that, because most of the time it's not going to turn out with a situation like in Ukraine.